Well, we've got the Friday jobs number, the all-important Bureau of Economic Labor and Statistics. And near as I can tell, it is the final green light to a Fed rate cut. We do have, obviously, a Fed meeting next week. Actually, I think it's the week after. But we do have a key inflation print, one last inflation print before the Fed meeting. But certainly looks like the Fed will be cutting rates one more time. And then the big question will be, will there be any rate cuts in 2025? So let's go over the jobs number from Friday. We got a jobs number of 227,000. The unemployment rate did tick up. It went to 4.2. The estimate was 214, so slightly more than expected. Unlike previous reports, who have all seemed to be revised down, this month had September in the previous month being revised up. October was raised from 12,000 to 36, and September was also raised 32,000 to 255,000. So again, folks, I ask you, what is going on in the economy based on the economic numbers that we talk about, we discuss? Inflation is ticking up. The jobs market is strong, and yet we will get the rate cut on the 17th. The current odds of the rate cut after the jobs report ticked up quite substantially. They ticked up to 77%, the current odds of the December rate cut happening. So again, it does seem like it is coming. It is really interesting to look at the number, right? Because I don't know if you know this, but when we talk about the unemployment number being 4.2, it is actually 4.246. Slightly lower than the record high, the recent record high in July of 4.253. So this does bear watching. Again, we might be trending to a new high. The job market certainly, I don't think the job market is nearly as strong as these numbers make it look. But again, it is what it is. We will look at that. Actually, the chances of a job number are now 85%. Sorry, going into the meeting or going into the report, it was 67, aka 70. Now 85%. So 85% chance of the Fed cutting rates. Wages were up 0.4 for the month and 4% year on year. So we are seeing true, real wage growth, right? If you assume for a minute that inflation's 2.5 and you have wage growth of 4. When you do the math, that's actually a positive 1.5. So again, we are seeing some real wage growth. This is how you will ultimately fix the housing market. It is not quick. In fact, I would argue it's painfully slow. But one of the ways to fix housing is have prices be flat, rates come down slightly, and wages go up into this. This is why, I fear the housing market will be something similar to the 80s, where we just slowly climb out of this horrible affordability matrix. We are getting more and more data post-election. We are getting key economic data, and it looks like Americans are spending big after the election. We have seen a notable tick up in credit card spending, and savings rates appear to be falling. So again, it does seem like a lot of folks reined in spending pre-election, as we've talked about a lot. We talked about the buyers being, scared, nervous, afraid, whatever it was. People kept their spending in check before the election. It certainly seems to not be the case now. Chances of a recession seem to be non-existent, at least in the current data. And again, I think we talked about it last week. GDP Now has a Q4 forecast of over 3.5%. It is hard to have a recession when the economy is growing 3.5%. So pretty interesting. We did get some earnings report on Fridays. We got Dollar General beat top line, missed bottom line. When I say that, folks, just so you know what that means, top line, bottom line. Top line you can think of as total sales, how much stuff did, in this case, Dollar General sell. And then bottom line is how much money did Dollar General make, right? How much profit did they have after all expenses? So when I say meet revenue, it means they sold more than they expected. When I say they missed earnings, it means they made less than expected. Ulta Beauty beat top line, beat bottom line, and raised guidance. Again, maybe this is return to office. Maybe it's, I think it was in the 80s or the 70s. There was this lipstick index where women would go out and buy a little treat. Maybe that is occurring now. Petco beat top line and bottom line, and Lululemon did beat top line, bottom line, but did highlight a U.S. slowdown and better international sales. So we may be seeing, the evolving consumer. I again suspect, like a lot of reports we've seen, there was a slowdown in spending in the U.S. because of the election. It'll be interesting to see what Lululemon reports next quarter. I want to shout out one of the followers talking about getting a disrespectful offer accepted. Again, I shared with you earlier that Thanksgiving weekend was the best weekend to make those offers. In this case, they found a property that was listed originally for $100,000, $100K. Ultimately, after some offers and follow-up and back and forth, they got it for $77,500 with 2% seller concession. So let's call it $75,000 after negotiations. And rent, they say, will be $1,250. So $75,000 property, $1,250 rent, even with a cost of capital at 7%, that should cash flow. We did get news that David Sachs from the All In podcast is going to be part of the administration. He is going to be the AI and crypto czar. Yes, David Sachs from the All In podcast is our new or soon to be AI and crypto czar, which I think is a very interesting title. We did get more Fed president speak. Again, this is very important stuff. We got Fed Bowman. Again, Michelle Bowman, kudos to her. She was the one dissenting vote when the Fed cut 50. She's also been trying to yank the rest of the members to a neutral rate of 4 instead of 3. Again, she is someone we need to follow when she speaks. And she's basically saying the upside to inflation remains prominent. Again, you've heard me talk about it, and you go back and look at history. I am particularly nervous of the 81-82 timeframe, where we kind of had that double bout of inflation and produced a horrible U.S. recession. Again, seeing inflation come back in a meaningful way would not be good, would force the Fed to reverse track. So she is on it. She says, I want to proceed cautiously and gradually with rate cuts. Core inflation is uncomfortably above 2%. Labor data is becoming harder to interpret. What does that mean? What's the translation when Michelle Bowman says labor data harder to interpret? The data's crap. That's what she's saying. She says the data's crap. It's constantly revised. It seems to go one direction, although again, this month it did go the other direction. So the labor data that they count on, right? Dual mandate labor, keep the U.S. fully employed. Harder to interpret. And then finally, lowering rates too quickly could reignite inflation. And again, this is what happened in the 80s, where they thought they had beat the demon and slayed the dragon, and lo and behold, cut too much, and it came back. Looks like Canada is expected to cut rates 50 basis points at their next meeting. They're definitely going into a cutting cycle. Next week, again, we get a couple of key economic reports. It starts on Wednesday with CPI, Consumer Price Index. Again, that is what you and I pay at the grocery store. Last time, just so you have the numbers, was 2.6 headline, and core was 3.3. I don't know. It's going to get interesting. We talked to Dan Bird last weekend. We looked at the core, or we looked at commodities, and food prices are up. In fact, Chipotle, don't know if you go to Chipotle, but Chipotle just increased their prices again. Yes, Chipotle raised prices 2% because of input, aka food costs. And then, did I say core? I'm not sure I did. Core is 3.3. Thursday, we will again get weekly unemployment claims. This is something that you and I need to watch because, again, last week we ticked up. Was it a trend? Was it dirty data? We've got to watch that. And we will get PPI, Producer Price Index. What are the retailers paying for goods? Are we seeing that as a leading indicator for inflation or disinflation or deflation. We did get some more Fed speak. We'll go over these. Fed President Beth Hammack. We are at or near the point where it makes sense to slow the pace of rate reductions. Inflation, growth, employment outcomes, all firmer than we expected in September. We got some Fed speak from Fed President Goolsbee. We'll be watching interest rate sensitive sectors and lagged impact of monetary policy for signs that the neutral rate is approaching. What the heck does that mean? Well, I think that means they're going to be watching to see if these interest rate sensitive sectors pick up. Do we see more transactions? Do we see more auto sales? The part of the economy that relies on debt, does that start accelerating? And if it does, they will use that as a sign the neutral rate is close. The speed at which the Fed is moving will probably slow. I think they are telegraphing an environment where 2025, at least for the first half, again, has no cuts. Lastly, something that you and I have been talking about seemingly for 18 months. It's good to see the Fed presidents talk about it. Housing inflation to fall as lagging government data reflects what private data shows. To me, this is a Fed president once again pointing at the data, saying that the data is bad, the data is old, the data is outdated. I would hope they would come out and say, can't we do better? We live in a world where technology is far more prevalent. We certainly could get data from, I don't know, apartments.com, rents.com, whatever you want. There's a lot more data. We do not need to rely on these outdated modes for collecting shelter and rent information. And then finally, we are starting to see the pain in the syndication space. Again, one of the articles or one of the things that I typically read every morning is something called The Real Deal. If you haven't checked them out, follow them on Instagram, whatever that is for you. But The Real Deal is highlighting that some of the big GPs, right, general partners of syndications, are getting sued personally. Tide Equities was highlighted in the article, being the general partners being sued by the lenders for personal liabilities. Looks like I'll just use their first name. Sean's being sued for $26 million, and Ryan's on the hook for $30 million. Again, folks, we've been talking about this for a while. The pain is coming. A lot of these GPs think they are immune because they have no personal guarantees. But in an environment like we are in, you are going to see people, in this case, the lenders, go after the GPs for personal liability. So again, folks, this is interesting. Don't forget, folks, we are less than 70 days away from our Vegas event. It is time to get your tickets. They are selling out. We will be selling the event out. Don't miss it. Can't add tickets this year. We are at maximum capacity. And then finally, you've heard me say this a lot. Jason Pritchard is one of my Mount Rushmore of real estate investors. Jason Pritchard is a part of our school community. He is actually going to be in school today with me from 8 a.m. to 10 a.m. So we're going to have Jason Pritchard for 2 hours. If you're in school and you have the time this morning, feel free to join. The Zoom link is in the calendar. Come on and ask Jason some questions. We are going to talk about all things real estate. He is at the Vegas event, so I'm sure we'll talk about that. Again, folks, 67 cents a day. I do not know why you haven't joined yet. You want to be around all of these amazing people and see what we give you each and every day, every week and month. So hope to see you in there. Again, if you're in school, you have a treat today. The one and only Jason Pritchard here in about 14 minutes. And I will talk to you there. Take care. Have an amazing day. Peace.